Yes,
Sabi na po,
ma'am.
ma'am. Sabi na ko, ma'am.
Ara ka na
Sabi na.
discussing about the second method, which is the temporal method. Can you hear me? Can you hear me?
Yes, ma'am. Yes,
Everybody?
ma'am.
Okay. Sige na ko, ha? Wait, record no. Okay? Which is, second method is the temporal or the remeasurement method. So, monetary assets and liabilities are to be translated by using the current or the closing rate. The current or the closing rate. An asset or a liability is monetary if it represents a claim to a fixed amount of pesos. So it represents a claim to a fixed amount of pesos. So an asset is monetary if it represents a claim to a fixed amount of pesos. So when you talk about most liabilities are monetary if this represents a claim to a fixed amount of pesos. For assets, cash is monetary, a receivables monetary. So as long as it represents to a fixed amount of pesos. So how do we translate monetary assets and liabilities? We translate by using current or closing rate. Next, non-monetary assets and liabilities carried at past exchange prices or historical cost are translated at historical or actual exchange rates, which results to translating these amounts to the equivalent number of pesos on the date of the transaction. So non-monetary assets should be translated by using historical or actual cost. Non-monetary assets and liabilities carried at past exchange prices or historical cost are translated at historical cost. So in other words, only those that are carried at past exchange prices, resulting to translating these amounts to the equivalent number of pesos on the date of the transaction. On the other hand, non-monetary assets and liabilities carried at current or future exchange prices like marketable securities or your inventory carried at replacement cost are translated by using the current or the closing exchange rates. So there are two rules with regards to non-monetary assets and liabilities. Non-monetary assets and liabilities carried at past exchange prices or historical costs are translated by using historical or actual exchange rates. On the other hand, non-monetary assets and liabilities carried at current or future exchange prices are to be translated at the current or closing exchange rates. Next, paid-in capital. By the way, I am still talking about the remeasurement method or the temporal method. Paid-in capital accounts are translated using the historical or actual exchange rates at the date of acquisition or at the date the original capital transactions occurred if subsequent to acquisition. 5. The components that make up the ending retained earnings balance are translated as follows. So, in other words, before we arrive at the ending balance of retained earnings, we start with the beginning balance of retained earnings should be recorded or should be stated at an amount equal to the ending balance of the past period. So the ending balance of the past period, that should be the amount that you have to use for your beginning retained earnings. Dividends are translated using the rate existing, the historical or the actual rate on the date of the declaration. Net income or loss, as we understand that we determine retained earnings end by adding retained earnings beginning, then we add net income, we deduct net loss, we deduct dividends. So how do we translate our net income or loss? Net income or loss is carried forward from the translated income statement. Okay, next. Revenue and expenses related to assets and liabilities translated will be translated at historical rates or actual rates, primarily inventory cost, depreciation, and amortization are translated at the respective historical rates used to translate the related asset or liability. Like your building, so we have the accumulated depreciation. So for that, in other words, for items that relates to non-monetary items, the rates used are those used to translate the related non-monetary item. So I'll repeat, revenues and expenses related to assets and liabilities translated at historical rates or actual rates like inventory, like your depreciation and amortization are translated at the respective historical rates used to translate the related asset or liability. So if you talk about building, you have depreciation. If you talk about intangibles, you have your amortization. Next, other revenue and expense accounts are translated in a manner that produces approximately the same results as if the individual transactions were translated at the rate in effect when the transaction occurred. Generally, a weighted average rate is used on all transactions for simplicity sake. So we cannot generalize all revenues and expenses accounts, but we have to consider those expenses accounts that relate to specific non-monetary items like your equipment, your machinery. So you have your related depreciation expense. However, for the expenses, revenue and expense accounts that are translated in a manner that produces approximately the same results as if the individual transactions were translated at the rate in effect when the transaction occurred. Generally, we use the weighted average rate. We use the weighted average rate, just like in the case of your current method. And the transaction remeasurement gain or loss, the transaction remeasurement gain or loss is reported in the income statement. The translation or the remeasurement gain or loss is to be reported in the income statement. Now we are going to take up the straight problems. The longest here is problem number 1. So we will have problem 1 after. So, unahon taanay ang problems 2, 3, 4, and 5. Because we will only identify the rates to be used. And after this, 2, 3, 4, and 5, we will continue by discussing problem number 1. And for tomorrow, I will assign to you the multiple choice problems again and the multiple choice theory. So that will be our concern for tomorrow. Tomorrow is already Friday, and so we will be discussing the multiple choice problems that you will raise questions. It means that you really have to solve the problems, and then I will give you the letter answers. Those where you have questions, then we will discuss. Okay? Then, of course, we are going to end up the term with corporate liquidation. That will be up to Monday. And we will have our exam on Tuesday. Remember that we have no rest day. On Wednesday, we are going to start with the second term. So we will begin with module number 11. And I noticed that module number 11 up to module number 21, so far, we have longer modules as compared to 1 to 10. So anyway, everybody, will you refer to second, problem 2. Problem number 2, we still have uh, probably will end around 11:10, so we can have another renewal of time by 10:30, and so we will end up 11:10, just to consider the longest problem here, which is number 1. Okay, so everybody, will you refer to problem number 2? Let's try to fill this up. Problem number 2. And then problem number 2, we are using the current rate method. Translation into the presentation currency, for that matter, as compared to the temporal or the remeasurement method. Translation into the functional currency. Earlier, I discussed what are the guidelines in connection with the application of the current rate method and the temporal method. So, let's fill this up. Column 1, current rate method. Column 2, temporal method in problem number 2. Okay? So, exchange rate for 1 FCU, this is now your unit of measure is as follows. 20x0, 1 FCU is equal to 28 centavos. 20x2, 0.26, 20x3, 0.25, January 1, 20x9, 0.24, April 1, 20x9, 0.23, July 1, 20x9, 0.22, October 1, 20x9, 0.20, December 1, 20x9, 0.16, and the average is 0.19 for 20x9. And take note that normally the date when you have to present your financial statements, the date is December 31. The date is December 31. Okay? So we now begin with accounts payable. Okay, accounts payable. How do we translate this? Generally, our rule for the current rate, assets and liabilities are translated from the local currency into their porting currency using the spot rate on the balance sheet date, meaning the current or the closing rate. So let's now pick up all these assets and liabilities. And what is the spot rate on December 31, 20x9? Let's start with the column current rate method. Accounts payable, we use the spot rate on December 31. So, 0.16. 0.16. By the way, we use the abbreviations here. We use letter C, capital letter C for the current rate, H for the historical rate, A for the average. So we use C for the current rate, H for the historical rate, and A for the average rate. So in other words, we have to write the exchange rate and the corresponding letter. So I'll begin with accounts payable, 0.16 C, meaning current. Accounts receivable, 0.16 C. Accumulated depreciation, 0.16 C. Mga asset and liability items. Buildings, 0.16C. Class, escape lang anay iba, no? Because I am now trying to begin with assets and liabilities with the guideline that for the current rate, assets and liabilities should be stated at the current rate or the spot rate. So we have the current or the closing rate or what we call the spot rate. So accounts payable, accounts receivable, accumulated depreciation, buildings, cash, okay, notes payable, patents, okay. All of this should be translated by using 0.16. And 0.16 meaning you write capital letter C, meaning the current rate. So 1, 2, 3, 4, 5, 6, 7 are all to be translated by using 0.16. That's the spot rate or the closing rate on December 31, 20x9. Okay? Then we go to advertising expense. Now we go to the second rule I'm going to read in relation to the current rate method. Revenue and expense accounts, including cost of goods sold and depreciation, gains and losses, are translated using the exchange rate when the elements were recognized during the period. Because separate translation of numerous transactions is usually impractical, we use the average rate for the revenue and expense accounts under the current rate method. So the rate for the average for 20x9 is 0.19. Okay, let's begin identifying what will be translated by using 0.19a. Advertising expense, 0.19. A, meaning average. Amortization, 0.19A. Depreciation expense, 0.19A. Salary expense, 0.19A. And sales, 0.19A. So how many? Advertising expense, amortization expense, depreciation expense, salary expense, and sales. So there are 5 items that will be translated by using the average rate. Then For the common stock, what rate are we going to use? So we now use the historical cost. We use the historical cost. So taken into consideration this requirement. For reporting purposes, these amounts need to be stated in pesos. For each balance, indicate the exchange rate that would be used if a translation, the current rate method is made. Then again, for each account, provide the exchange rate that would be necessary if a remeasurement or temporal method is being made. The company was started in 20x0. The buildings were acquired in 20x2 and the patents in 20x3. So, for purposes of translating your common stock, we now use historical cost, the translation rate when the company was started in 20x0. So, for common stock, we use 0.28H. 0.28 and then we use H. That's for historical. Common stock, H, meaning historical. Okay? Historical. Now, how about the other elements? Dividends paid on October 1, 20x9. Dividends paid on October 1, 20x9. So, the rate is 0.20. You are given an actual rate. You are given an actual rate. So, that's specifically on October 1, 20x9. Okay? So far, we have already answered the first column using the current rate method or the translation from functional currency to presentation currency. Next, we go to the temporal method. With the temporal method, we also have a set of rules to use on how do we assign values to our various items. So, how do we value our assets and liabilities? Our assets and liabilities. Monetary assets and liabilities are translated by using the current or the closing rate. So, an asset or liability is monetary if it represents a claim to a fixed amount of pesos. Now here, we have several assets and liabilities. However, some do not qualify as monetary assets. So we have to select only the monetary assets that represent in the balance sheet. They are translated at the closing or the current rate. An asset or liability is monetary if it represents a claim to a fixed amount of pesos. So, how about this? What are the monetary assets and liabilities? Here, given. We have accounts payable, monetary liability, accounts receivable, monetary liability. Then we have cash, monetary asset, accounts receivable, monetary asset, accounts payable, monetary liability, cash, monetary asset, notes payable, monetary liability. So, these monetary assets and liabilities should be translated by using the closing rate, the current or the closing rate. So, just like in the current rate method, we use 0.16. Current rate on December 31, 20x9. So, repeat, accounts payable 0.16C, accounts receivable 0.16C, cash 0.16C, and notes payable 0.16C. So these are the only monetary assets and liabilities. The other assets and liabilities, here we still have accumulated depreciation on the building. Then we have buildings. Then we have patents. Okay? So they are considered as monetary assets and liabilities. Monetary assets and liabilities. Okay. So how do we translate our accumulated depreciation? How do we translate our accumulated depreciation? Likewise, how do we translate our building? Since the accumulated depreciation relates to building. In other words, we have to translate our accumulated depreciation just like that of the building. So accumulated depreciation is referring now to the historical cost. As stated, the building was acquired in 20x2 when the rate was 0.26. So, if the building account will be translated, the amount will be translated by using 0.26 H meaning historical. The same with accumulated depreciation. That will be translated by using historical cost. So repeat, building 0.26H, accumulated depreciation 0.26H. That was the rate in 20x2, the year when the building was acquired. So 0.26H. Okay? Then our advertising expense is an expense. So at what rate? Since this advertising expense does not relate to any of the assets, unlike you say depreciation or accumulated depreciation, it relates to building. While your advertising expense falls under other revenues and expenses accounts, that will be translated by using the average method. So advertising expense, 0.19, that's the average rate, 0.19A, 0.19, meaning A, or average. Then we have salary expense, 0.19A, salary expense, and sales being an income account, 0.19A. So for A or average, we are going to translate advertising expense, followed by salary expense and by sales. Now this will be translated by using 0.19, the average rate. How about for amortization of patents? Our patents were acquired in 20x3. So in 20x3, the applicable rate is 0.25. So patents, we now translate by using 0.25. 0.25, and this is H, meaning historical, when the patents were acquired in 20x3, when the rate was 0.25. So patents, 0.25H, 0.25H. And according to this statement that Revenues and expenses related to assets and liabilities translated at historical cost should also be translated at the historical rate. So, if we translate patent by using 0.25, the rate in 20x3, and we mark it H, your amortization of patents, amortization expense on patents should also be translated by using 0.25H. So repeat, amortization expense of patents should be translated using 0.25 and it is H. And the same with patents, 0.25H. Next, how about your depreciation expense? Again, an expense related to an asset building, which was translated by using 0.25, 0.26, I'm sorry, 0.26 and mark H. So your depreciation expense should also be translated by using 0.26, 0.26, and it is H or historical. So again, buildings, 0.26 H, depreciation expense is also 0.26 H. Okay? So we are now through with the items except common stock is normally recorded at its historical cost when the company was organized or started. So we use 0.28, 0.28, and it is historical. 0.28, and it is historical. Okay? And one item left is dividends paid on October 1, X9. So the rate is 0.20. 0.20. Okay? So we are now through with, I'll repeat, for the temporal, historical, temporal method, accounts payable 0.16C, accounts receivable 0.16C, accumulated depreciation 0.26H, advertising 0.19A, buildings 0.26, that's 26H, your amortization of patents 0.25H. Then cash 0.16C, common stock 0.28H, depreciation expense 0.26H, dividends 0.20H, notes payable 0.16C, patents 0.25H, salary expense and sales are each 0.19A. Okay? So that's for 20, problem 2. Problem 2. Then we now go to number 3. The current rate method, translation into presentation currency versus temporal or remeasurement, translation into the functional currency. For each of the following account balances, identify the exchange rate used to translate current rate method or remeasure under the temporal method. The choices are current exchange rate, historical rate, weighted average, and others. So, clearly, you may answer current, historical, weighted average, or others. So, let's now begin with accounts receivable under the current method, current. It's a monetary asset. Remeasurement, current. Prepaid assets under the current method, current under remeasurement, historical, because this item is non-monetary. Then accounts payable under current, current under remeasurement, current. Common stock, both historical. Land under current method, current under remeasurement is historical because land is non-monetary. Goodwill under current method is current, under remeasurement is historical. Sales under both is weighted average, and depreciation is here. Depreciation under the current method, weighted average, but under remeasurement, it's historical because it relates to the fixed asset account. Okay, let's go to 4, current rate method. Cable Tech, a Philippine corporation, owns 100% of the Canadian company, Fiber Quebec. The Canadian dollar is the currency of record and the functional currency. What currency exchange rate would be used to translate Fiber Quebec's accounts into pesos? Choose from current, simple average, weighted average, or historical. So we now have the current rate method, prepaid insurance, since it's an asset, a class current rate ni, hindi kay temporal. So, under the current rate method, all assets will be recorded using the spot rate or the current rate. So, prepaid insurance, current, land, current, bonds payable, current, yapon kay liabilities, goodwill, asset, current, allowance for doubtful accounts, current, deferred income, taxes, current. So all of these are current. Common stock, historical, sales, weighted average, okay na? So prepaid insurance, current, land current, common stock historical, bonds payable current, sales weighted average, goodwill current, allowance for doubtful accounts current, and deferred income taxes current. Okay. Now, will you work on your seat work, Roman numeral number 5? So Roman numeral number 5. I'll give you 5 minutes for this. Zoom will end